Ladies and gentlemen, good day and welcome to Jyothy Labs Q4 FY2024 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manoj Menon from ICICI Securities. Thank you and over to you, sir.
Hi everyone. As always at ICICI Securities, it's our absolute pleasure to host the management of Jyothy Labs for the results conference call. The company is represented by Ms. M.R. Jyothy, Chairperson and Managing Director, and Mr. Sanjay Agarwal, Chief Financial Officer. Before I hand over the mic to the management for the opening remarks and for the Q&A proceedings, I want to congratulate M.R. Jyothy for the reappointment and also as the resignation as the Chairperson and MD. Thank you.
Thank you, Manoj, and good afternoon, everyone. We all welcome you to the conference call of Jyothy Labs. We'll be discussing our performance for the company for March quarter and for the full year ended March 31st, 2024 with all of you, followed by a question and answer session. So a quick snapshot of the results. I'm sure all of you must have had a glance of it. We have delivered a top line growth of 7% for the March quarter and 10.9% for the full year FY24. In terms of the volume growth for the quarter is 7.2% and for the full year is 9%. We continue to deliver healthy performance with double-digit revenue growth for this year and 2-year, and also on a 2-year and a 3-year CAGR basis. EBITDA margin for the year stands at 17.4% versus 12.7% for the previous year. Also, our net profit for the year has grown by 54% and stands at 369 crores, our highest yearly profit. So good profitability and performance. For the quarter as well as for the year, we have increased our E&P spend significantly by 30%, and we believe that this constant investment in our business is giving us the strength to service our consumers and provide a sustainable growth for years to come. So that's a key pillar which we want to keep investing for the future. Similarly, at the balance sheet level, 2 key matrices. Our working capital is at 5 days versus 13 days last year, which demonstrates an efficient operation. And also cash and bank balance at 618 crores. So a strong balance sheet will help substantially in our future growth. And board has also proposed a final dividend of 3.5 rupees per share, which is subject to the approval of the shareholders. Talking about some other qualitative factors, during the year we have been focusing on enhancing our direct distribution reach. So now we have surpassed, we were at 1.1 outlets till last year. The direct reach now is at 1.2 million retail outlets. We've been focusing on new launches. So prominent ones have been on the liquid side, liquid detergent and Margo Neem Naturals during the year. Also increasing our engagement with consumers, thereby strengthening our core business. And as we move along, our focus has been and will be towards more digital acceleration, which will further enhance our sales productivity and consumer engagements. In terms of categories performance, fabric care is doing well with 10% growth this quarter, and for the full year it's 12.6%. We continue to witness healthy growth in our fabric care portfolio, and also keeping a sharp focus on delivering value in the main wash detergent brands. There's also a good traction in our liquid detergent category, and our key liquid detergent brands Henko and Ujala both have shown good growth. Similarly, our expanded distribution is helping us in faster growth and expansion across all product lines, including our mid-price detergent brand, which is More Light and Mr. White. Our dishwash category, that sales have increased by 6% for the quarter, and for the full year, it's grown by 8.3%. We continue to enhance the brand equity of both EXO and Pril by driving LUPs, doing more digital awareness, ground activations. Given the untapped potential of this category, we've done some SKU mix realignment as well based on the consumer feedback and cognitive action. So hence, very positive to strive for higher growth in future as well. In HI segment, our sales have been, there's a decline by 9.8% for the quarter. However, for the full year, it's a flat growth. And the reason for this particular quarter decline has been primarily because of seasonality impact and in our core markets of north and east of India, there's been an extended winter season, so that had given this decline. But as we know, as you all know, our efforts have been more driven towards a liquid portfolio, and we have a superstar Kareena Kapoor, and we're trying to focus on a key market, emphasizing the unique automatic feature of a Maxo machine, which will drive the long-term success for our category and for the Maxo brand. Finally, for our personal care sales have increased by 18% for the quarter and 21% for the full year. Our neem-based Margot soap, with its natural benefit proposition, has been delivering robust performance. Both our base variants and the new variants which we have launched are doing well. And with the higher growth in our personal care portfolio, it's a very positive outcome for us as it enhances the premium or the higher margin products in our overall portfolio at the company level. So with that, just to summarize, we'll continue to focus on volume-led top-line growth. Considering our growth aspirations, we'll endeavor to have higher allocation of our resources towards brand building initiatives and also continue to expand our direct reach distribution with the aid of technology. For FY2024-25, we are expecting healthy growth, and one of the things which have been slightly an issue was on the rural market. So we see now there's a gradual improvement or pickup in the rural market, and the slowdown seems to be now bottoming out. So hence, overall macro looks positive. We'll also be focusing on gaining our market share across categories. So this will enable us to build a higher scale for our business. With this, I finish my opening remarks. We are happy to answer any questions or clarifications you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we wait for the moment while the question queue assembles. First question is from the line of Vishal Gutka from HDFC Securities. Please go ahead.
Yeah. Hi team, congrats on a good set of numbers. I have 3 questions. First, with regards to detergent, as of now, what is the share of liquid within the overall pie? Although I know that it's a little bit a lower side. And what are you doing to increase their share that one of your competitors is planning to launch value for money liquid detergent? So any plans of launching, giving more value to customers by launching at a disruptive price point? Second question is on the soaps. So margins for the soap category has come off in a very significant manner. I believe that you are investing to drive sales, given that aggressive investment is there. By when we expect the margins to normalize in the soaps category? And a third question on the DMS, distributor management system. In the presentation, you highlighted that they have installed new DMS. Can you please throw some light what is exactly the new DMS all about? Thank you.
So the liquid detergents for us, yes, it's a small contribution, but the category is growing, and it's on both the brands that is Henko and Ujala. Both have been accepted very well. Henko is on the premium side. Ujala is more on the mid premium value for money brand, and both are doing well. Good acceptance in modern trade, e-com, and also in the general trade. So far doing well. Yes, it's a small percentage for now, but we see in the coming future that the category is growing well, and it will also in turn grow well for us. Now, value for money, you asked in terms of competition. Well, you will see something in the future, and we'll be very price competitive in both. Be it in any segment, and the quality of the product will be much ahead of what the competition is, because we always believe in delighting the consumers for the money they pay in whichever the segment that is. So that's on liquid detergents. On Margo, yes, we had variant launch last year. We had introduced 3 new variants, and we had to drive a lot of investments behind establishing those variants. And if you see the personal care for us, Margo as a thing has done really well. And both the base and the variants have done well, and we have invested behind both the brands, as in both the segments. So that is why you see a bit of margin compression there, but otherwise will do well on the personal care as such. DMS, yes, we had Aadhaar, which is a different distribution management system. We have shifted to Botry, which is little more accepted in the industry, and implementing that has been done in the previous year. And this year we'll reap benefits of implementing that. It's much more robust as a system, so we'll see much more benefits coming out of that system.
Great. Just last one question from my side on the NPD. I think last 2-3 years have been a lull period for NPD, apart from creation of new detergent brands that we have. So any plans of launching new NPDs or pouring into newer categories in F25?
Yeah, we have a few in pipeline, but you'll come to know as and when we launch it. It'll be too early to say right now, but we do have many NPDs lined up.
Great. Wishing you all the best for F25. Thank you.
Thank you. Thank you.
Yeah.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead, sir. Yes, sir, your line is unmuted. Please go ahead.
Oh, yeah. Sorry, I had muted it. Sorry for that. Yeah, so 2 clarifications from my side. One on the ad spend increase, which is quite pleasing to see. But some granularity, if you can offer in terms of how much this is actually for NPD and, let's say, building, something for the future, and how much of this is, let's say, relative competitive intensity or a share of voice to share of market, related aspects. So that's one.
Yeah. So Manoj, when you say new launches, we definitely want to back it by investment. So, if it is a new launch, we would end up spending a little more than the regular that is, and the rest of them is on a continuous regular investments that happen. I can't put a number right now for you, but any launch will have the more intensity. And we don't want to play the share of voice game there. We would want to back it by consistent investment. We have many brands to support, and we have more celebrities on most of the brands that we have, where we believe that the visibility and with a good reason to buy, I think that will be better for our brands for now.
Very clear. Fairly clear. On the second aspect is on the distribution expansion. I did hear the commentary about the numeric distribution expansion aspect. But some more color in terms of, let's say, because you have been on this journey over the last few years, and how it's been your learning which geography has kind of supported this and which one possibly hasn't. And more importantly, for those outlets which you would have reached for the first time in the last, let's say, 12 or 24 months, what is the incremental possibility of line selling, bit selling, etc., which you see, and any quantification which you can provide, either the past or the future?
See, Manoj, I don't want to quantify anything. Yes, we started the journey a couple of years back, and we'll continue the journey. So it's not it's an ongoing thing. We would like to recruit more retail outlets into our this thing. And when we recruit, it doesn't mean that immediately you get the thing. We start with the brands that are helps us get entry into those new outlets, which starts from an LUP, and depends on the kind of market where we are. Also, if it is rural, it's a different thing altogether. So the approach is different depending on the market, but we see that these new outlets will become the going forward, this will start generating more and more revenue for us.
Fair enough. There is one small clarification. If, let's say, the contribution to your overall volume throughput, from the distribution vertical, or rather, let's say, the distribution vector, is X, right, in FY24, will it be X or 1.1 or 0.9X? How do we think about that, let's say, for the next 2-3 years?
Come again?
Suppose, let's say, your overall growth of X, let's say, of which the distribution vector has given you a certain rate of growth. Do you think that similar rates of growth are possible for the next 2 years also?
Yeah, should be. We also have new product launches. We have, so the existing retail that we have grown, those become a pipeline for us for the future, new set of launches, new set of. See, Manoj, you also know that some of the brands for us are some, regional in a certain geography, right? Some of the brands, but these things that we are doing is from a future perspective as well. So where we nurture these retail outlets, those outlets will become tomorrow's business for us. So for us, the current and the new will happen parallelly. So I hope I'm clear on that.
Yeah. Recently. Sure. Thank you, and all the best. I'll step back in the queue.
Yeah, thank you.
Thank you. The next question is from the line of Rishi Kothari from PI Square Investments. Please go ahead.
Hello, how are you?
We can hear you, sir.
Yeah, thank you for the opportunity. I wanted to know what exactly are we doing in terms of detergent and liquid wash brand differently from our competitors in terms of the let's say dealer or any specific store-based products. How we are different from the brand? Is it purely based on our positioning in terms of margins that we are providing to our competitors?
Sir, unfortunately, the line is bad and we can't understand anything whatever you have asked for. Would you like to just join again by dialing up?
Am I audible now?
This is a little better, yeah.
Yeah. I just wanted to get some clarity on the products that you are doing right now. So mostly it is focused on the tier 2, tier 3 segment, right? If I'm not wrong.
You're talking about liquid detergents?
Yeah.
Yeah, liquid detergents for us is more, I would say, not tier 1, tier 2, but more modern trade, more urban, and more from a south specific as a market. That's broadly our take on liquid detergents. It's more growing in the south and more in the urban areas.
Okay. So in terms of competitors, as we saw in some of the competitors that are big players in the market right now, they're also shifting from powder detergent to the liquid detergent part. So what exactly value addition we are providing for a customer in terms of, or in terms of a dealer that we are giving them product in terms of margins or something that prefers your product compared to any competitor?
See, our products are well-known brand names. It is, if you see the competition or whatever you're talking about, if they are new launches, they take time to establish. Unless they, really cut margins, they can't. So the thing is, we have good brands. Ujala is a very well-known brand since many years. So we have introduced liquid detergents under Ujala, which people know the quality that Ujala offers. People know the quality what Henko offers. Henko is on the premium end. So once you use our product, you will come to know what is the difference between us and the competition. And we are very competitive in terms of, we are very competitive in the market. So once people use it, we also back it by investments. So once the consumer uses, they stay on with us. So it's the quality also that is helping our brand, because you need to have repeat purchases, right? So it's definitely the quality.
Okay. So in terms of the product mix, or in terms of the new products that we are trying to launch in the market, so how much capex are we expecting for next 2 to 3 years? You can have some ballpark figure.
Did you ask for capex?
Yeah, capex, yes.
So that won't be anything significant in terms of the new product launches. It will be more on the media spends which we need to do for the new product launches.
Okay, so so in terms of innovation part, are we looking at any capex?
Yeah, that normal capex will be to the tune of 40 to 50 crores per year.
Okay, great. Okay, thank you for the opportunity. I'll join the team.
Thank you.
Thank you. The next question is from the line of Gaurav Jagani from Axis Capital. Please go ahead.
Thank you for the opportunity, sir. My first question is with regards to the dishwashing segment. Now, if you look at for the last couple of quarters, the growth rate, has really come down there into, I would say, high single digits or thereabouts. And, previously it used to grow in high double, I would not say high, but low double digits. So what has really happened for the growth to slow down in the last couple of quarters?
Yeah, so on dishwash, last 4 years we've been on double-digit growth, and our bases have also gone up. But if you see from a market share, we have been holding on to market share. We are growing in line with the category. So we are, as per what the category is growing, we are there both in the bar and the liquid, and that will continue. So we have 2 strong brands there. We are the number 2 brands in the country, both EXO and Prill, and we are confident that it will continue to grow. For example, East as a thing. South we were anyway dominant, but East was a market where our market shares were in low single digits. Today they are in good double-digit market shares. So that shows us the growth, and that is our confidence on both the brands.
Also, one thing on category growth, do you think, after the high COVID base and all, people were using a lot of this in their home, and that is why the category growth has slowed down, and the rates that we are seeing right now are more sustainable ones?
No, so the category growths are healthy, sir. So that is, as of now, the category growth both on liquid and bars are healthy, and that will continue. Hopefully that will continue. We are very much prepared to get those growths on our brands as well.
Okay. Sure. And my second and next question is with regards to, the margins bit. We had enjoyed good margins during the deflationary cycle over the last year. But now with the raw material prices, kind of stabilizing, what would be your outlook towards the margins going ahead?
So, sir, while, as you said, yes, commodity prices have been volatile. However, we target to have our EBITDA in the range of 16 to 17% for the full year.
That's perfect. And
having the media spends the way we have been doing it in the past.
Okay. And just on bit of the pricing bit, we have seen competition taking price cuts, especially the detergent segments and the soap segment. So any pricing action from your end that you're envisaging? Because, given that your volume and value of growth in equal measure, it seems that you have not taken any price cuts really.
But that will be, that's very regular in nature. Nothing anything significant or which needs to be worried about. But due to competitive action, if there is any price cuts or which we need to take, we'll definitely do that to remain competitive and drive the volume growth. But nothing significant is there in any of the categories in which we are present now.
And my last question is with regards to the tax rate. If you look at it, the tax rate for this year is around near to the 23% mark. So what will be the tax rate guidance for the next couple of years?
Yeah, so our tax rate has been in 22-23 range for this year, and it will continue for the same for the next year too.
Okay, thank you and best of luck.
Thank you. The next question is from the line of Kaustubh Pawaskar from Sharekhan BNP. Please go ahead.
Yeah, thanks for giving me the opportunity. So my question is again on dishwashing segment. If you further get in the segment, is bar growing lesser than the liquid or liquid growing lesser than bar, and that is impacting our overall growth for last 2 quarters, or both are growing at the same pace and it is competition which is hurting us, and we should, with the initiatives we have undertaken, we should expect the growth rate to improve in the quarters ahead.
Yeah, so we have taken initiatives and Kaustubh, and we'll continue to do that. We've been doing that, and for us dishwash is a very good segment, and we don't want to give any specific numbers, but both bar and liquids are growing healthy.
Okay.
Our market shares are intact, which also shows that that we are in line with the category growths that are happening.
No, because initially Sanjay also mentioned that you are also focusing on LUPs in this space. So whether the mix is impacting the value growth, but you are doing good at a volume level, just wanted to understand on that as well.
Yeah, LUPs is more entry strategy for us to get into new outlets. So LUPs help us there in also recruiting new consumers. So that will always be there, for that purpose. But slowly we would definitely upgrade these consumers once things are better in the in the macro at a macro level. People will aspire to get into bigger and better segments there. So LUPs are more from an entry point strategy that we are taking that as. So yeah.
And my next question is to Sanjay sir. So you just in your initial comment you mentioned that you are expecting healthy growth in FY 2025. So this year we ended with around 9% kind of a growth. So next year, considering the recovery in the rural market and the overall optimism which is building, and most of the companies in their call they have stated that they are expecting recovery in the volume growth, and that should help them in FY25. So in that context, we should expect low double digit or low teens kind of a revenue growth for us, which will largely be driven by volumes.
See, our wish is always to grow in double digits, which we have always told, right? And so far, our volume growth have been pretty healthy. If you have seen in the last 4 years, we would want to continue on that journey. If the monsoon is good and if macro is there, we will definitely want to aim at that number. Okay. Aim at double digits, basically. Yeah.
Sure. Yeah. Thank you.
Thank you. The next question is from the line of Harit Kapoor from Investec. Please go ahead.
Yeah, hi, good evening. So I just wanted to get a slightly 2-3 year historical sense on liquid. So if you look at the fabric care portfolio, 1,200 crore revenue, if I just X out Ujala Liquid Blue, the detergent portfolio, considering powders and liquids, how large as a percentage would liquids now have been into our mix? And the rate of growth, I mean, you don't have to tell me exactly what the growth is, but the rate of growth, how different it is, from the powders right now. The reason I ask this is because, our understanding is that category growth in liquids is quite high, and incumbents are investing there, including you guys. So just wanted to get a little bit of sense of how that's panning out for you.
Yeah. So for us, see, Ujala Supreme is more a post-wash thing. For us, liquids we have introduced since last one and a half years. So the contribution as such to the detergent is, small for now, but the rate at which it is growing is healthy, and we are seeing that growth coming across channels as well. So more urban phenomenon for now. But soon it will catch up. We have right now liquid detergents at two segments, one at a premium and one at a mid-premium level. And going forward, you will see some more action there. So the category is growing in double digits, and we want to get a share there as well.
Understood. Very clear. The second thing was on pricing. So, this year, the revenue growth has been in double digit. The volume growth has also been kind of high single digit levels. One of the soap players is already seeing some incremental price increase action starting out already. And I think largest FMCG companies also spoken about inflation coming back in the second half of the year. So I was just wondering that while the early part of the year you may not see pricing growth, but when you're building your revenue model for FY25, do you see pricing growth being a factor here, maybe a low single digit or whatever that is? Is that the right way to think about it?
See, currently the way things are, I think it's better to just focus on just take the assumption that the growth is more volume-led growth, then presuming that there will be some value growth which we can expect in the coming year.
Okay. And last thing was on the direct distribution part. So, I know the thought process has been that 8 to 10% expansion in direct distribution on an annual basis. Is that a marker for F25 also that you'll be looking at, or is this a year where you consolidate some of it? You put it into DMS, etc. as well. So just wanted to get a sense on that.
We would like to continue that, what we've been doing since last 2-3 years. So yeah, mainly 8 to 10%. That would be a good thing to continue.
Got it. I'll come back in the 3 for more. Thank you.
Thank you.
Thank you. The next question is from the line of Amit Rohit from Elara Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Just on the household insecticide segment, when I look at the losses for the full year at the EBIT level is close to about 34 odd crores. And this is a year where, our growth is broadly flat on a YOY basis, 1 or 2% increase. And we would have a benefit of, lower cost has been the trend for most of the FMCG names. And here also, there could be some benefits which may come either on the packaging side and all. Although our losses have actually increased versus FY23. How should I think about it? In terms of the outlook for, at least from a loss perspective, I understand that we have this LV versus coil challenge, and which impacts our operating performance. But there has been a significant increase in FY24. Is any one-off in this year which we would have attributed to?
So Amit, it's been a subject matter which we have been working on it. So our aim is to make HI segment positive. Now the HI segment contributes 7.5% of our top line. Even if you look at it, the objective is to make HI segment positive. As you mentioned yourself, we have this more skew towards the coil, which we're moving towards the liquid. We've got a new brand ambassador. So we're continuously investing on the brand. We're increasing our advertisement spends, and that is why you can see some pressure on the bottom line as well. And a lot of it is on the allocation of the cost which goes on. But having said that, we believe if we can get the coil and liquid share maybe by equal 50-50 each, we will be positive in this segment as well.
Okay, but I mean, from a cost-cutting initiative, you don't think so there are, or maybe are there any one-offs like which probably will not happen in FY25, which would lower the loss?
No, nothing of that sort, Amit. It has to be more the product mix which we need to get it right and on which we are working.
So, I mean, just 2 years back, I mean, these losses were pretty less actually. So that's the reason. Is that we are now started to invest more behind this?
Yeah, that's what I'm saying. We are overspending versus the current benefits we are getting. So, Kareena Kapoor, we onboarded her a quarter back, and we are increasing our advertisement spend because we know we have a good product. On the liquid side of it, certain markets where we are very strong, east and north, we've been focusing there. So it may take some time, but we are confident that we will make this segment also a bit positive.
And second question, just on the overall market scenario, like you highlighted that there has been some improvement seen in the rural. Just wanted to check with the when we see even your numbers as well, the EBIT performance across segments, there has been some slowdown on a sequential basis. The margin-wise has kind of cooled off a bit sequentially. So is that, I mean, while the pricing strategy is more driven by how market react, but is there been any great trade increases or trade promotions which have been started recently by competition or something rather than the pricing side? Have you seen that anything incrementally post this result or something? If you could share some insights on that.
I mean, this is very not natural for any business where we have seen overall, I mean, our volume growths have been good, but when we see overall environment, there have been challenges, and therefore, yes, there will be scramble for the volume growth, and there will be trade schemes and all which would be played out. So that's pretty normal, but again, I would say that our focus has been increasing our distribution, increasing our brand investment, so that the growth, what we capture is not only a short-term growth, but a long-term growth. So we feel confident, for all the right reasons of India, like, I mean, GDP growth, I mean, per capita consumption, our product portfolio. So, and see, the best part of it for us, if we are able to build a higher scale, which we have seen over the last few years, our margin profile, 16, 17%, 17.5% for this full year, we have been able to achieve in spite of increasing our A&P spend by 30%. So we would rather focus on doing investments in the business, which is more long-term, than only doing some trade schemes and get the numbers for a particular period.
Sure. And just to follow up, you indicated investment behind brands would continue. Should I look at the annual number from an ad spend to sales ratio, or second half has been close to about 9%? So how do we think about it?
Yeah, so I think that's we have been aiming to be between 8 to 9%, and this year we have reached to 9%. So yeah, going forward, that range is what we would look forward for.
Okay, thank you so much. All the best, sir.
Thank you. The next question is from the line of Vishal Punmiya from Yes Securities. Please go ahead.
Yeah, thank you for the opportunity. Firstly, on the personal care category, we have seen that big players, big soap players have again started investing in the body wash category. So I actually wanted to get your view on this category in terms of what is the potential, and would you, as a strategy, continue to scale the Margo variants, or would you also like to participate in this category? And if yes, would it be through a separate brand, or just like detergents? Would it be just like detergents? Would it be a separate brand for you, or would you use Margo for the body wash category as well?
we have just launched the new variants in the soap segment last year, and that's been doing well. We would want to focus on that for now. While the body wash category is growing, it is growing more in the urban, and we would also get into that one day. And right now can't really say whether it's on Margo or it would be some other brand, but definitely we will have something there as well.
Understood. And just secondly on the balance sheet. So you basically, if I look at FY24, we have moved some of a good chunk of cash in bank to investments. So can we expect a higher run rate of other income in FY25?
So investments are all investments in liquid mutual funds only. So the market rates which are there for liquid mutual funds is what we would be having. Yes, as a cash balance accumulation happens, as a absolute amount, yes, there will be an added income as other income in the books.
Understood. Thank you very much.
Thank you. The next question is from the line of Vishal from HDFC Securities. Please go ahead.
Yeah. My question is basically on the margin. So you've done 17.4 in FY24. I believe Sanjay guided for 16 to 17% range. Is that correct?
Yeah, Vishal, it's better to be conservative. And as I said, the question someone had asked was giving a reference of the commodity prices being volatile. Now we're in the beginning of the year, and if you have to project for the full year, we can obviously revise if we do better. So yes, for now it is 16 to 17%, and as I said earlier, the objective is not to cut down any of the right investments which we want to do, whether it is adding people feet on the street for our direct distribution or increasing the media spend for our brands, new launches. So we want to keep all that with us, and considering all that cost or investments, we would aim to deliver 16 to 17%.
Great. And just last one more question. In the dishwashing side, Pril is considered to be much more of superior quality versus Vim in terms of liquid. So recently, Vim has what we call reformulated their product. In the presentation of HUL, they mentioned they have made some formulation changes, which they claim to be now a superior product on par with Pril, I believe. So do you foresee any possible impact, or there should not be an impact because the market is underpenetrated, the market itself is developing?
Vishal, we don't want to comment on what they have said, but Pril has always enjoyed a premium imagery, and that will continue. And there are consumers who believe in the brand, and we would want to continue on that journey. So Pril always had maintained the premium imagery. That will continue. I can only say so much for now.
Okay, great. Thank you.
Thank you. A reminder to all participants, you may press star and one to ask question. The next question is from the line of Percy from ICICI Securities. Please go ahead.
Yeah, sir. Can you give some idea on the state-wise driver of growth for different categories? So what I mean to say, that each category has a Pareto in terms of states. There are some states which are strong, some states which are weak for each category. So is it that a large part of the growth is coming because each of these categories is able to diversify its state presence or state salience? And if so, can you give some color around that?
So, Percy, it's difficult to give for each of the brands on this call. But yes, it will be a combination of brands which needs more investment in states or regions in which we are not that strong. So we would do that. We would increase our distribution focused in those states or in those regions, and for certain brands which have been, for historical reasons, being more focused on one of the other states. So it will be a combination of that, and I think that is a great opportunity for our portfolio. And one of the reasons why we've been doing well, because some of the brands XO, Jyothy just spoke, strong in South, now doing very well over years now in East as well. So similar growth stories will continue in the rest of India also. So it will be a combination of everything, and we are on that work to make sure that overall portfolio for the company keeps growing.
A few years ago, you had said that your South salience is like 38 to 40%. Has it changed? What is it currently?
So at a gross company level, it's broadly the same because South has also been doing well. But yeah, that remains in that range. So overall company has been doing well, and some of the other regions are doing marginally better. As we said, like East is, some brands have done well, but there are certain other brands which are not that strong in South. They have done well. So I think new launches which have taken place, they have done well, like liquids have done well in Southern India. So overall that pie, that contribution still remains the same. Yeah. But all the regions are doing well. All the regions are growing in that way.
Right. Second question, I just wanted to understand the growth construct going ahead. So last couple of years, we've sort of reaped the benefits of not only the distribution expansion, but also improving the systems and processes in the front end. Now, I think on that front, basically, since the last year and a half, we have basically achieved or come at par with other larger FMCG companies in terms of having a good hygiene, systems, processes, secondary sales tracking, etc., etc. So just want to understand from that point of view that those relatively easier battles have been sort of fought and won, and that has given us this stellar kind of volume growth over the last 2 to 3 years. And going ahead, of course, there is scope for improvement across many things, but incrementally, since we have already sort of come at par with many other companies, the quantum of things to do and the quantum of benefits to be reaped will not be so large as what we have had in the last 2-3 years. So in light of that, how confident are you of sort of doing close to 8-10% volume growth going ahead?
Percy, while confidence, we have confidence, if the demand scenario improves, definitely we'll be the first one to catch it. For us, as such, even as much as the last quarter, our volumes are healthy. And we have a lot of brands, we have a lot of sub-brands, a lot of other categories that we need to expand within ourselves. So we have a lot of room, and there's a lot on our plate, and a lot of expansion that way to happen across geographies, maybe also new introductions, and we also have a good distribution right now, which we need to milk it going forward. So all of that definitely is there. Also addition of new outlets. So all these, there's a lot of work still to happen. So that will continue.
Okay, that's all from me. Thanks.
Yeah, thank you.
Thank you. As that was the last question for the day, I now hand the conference over to the management for closing comments.
Sure. So thank you all the participants for joining this call today, and thank you ISEC team for organizing this call. And we at Jyothy Labs and ISEC team are available. If there are any queries, questions, please reach out to us. Thanks once again.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.